The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. And don't forget, you can listen to us anywhere on your mobile phone at tfnn.mobi. And let's check out where the markets are at right now. Right now, we got the S&P up 4 points. We have the Russell down 2.5. We have the Nasdaq up 8.5, and the Dow up 48. Oil right now is flat on the day. Not necessarily a flat, but just a really choppy day on oil overall. And it is right back at settlement at the moment. Not a difference, not even by a tick. We got natural gas right now is down. Let's see here. Oh, a little over 0.5%. We got corn is down $9 on the day. That's about a 2% down move on corn. We got soybeans currently up $5. We got euro dollar down 46, Aussie dollar down 30, and pound dollar down 1 whole pip on the day. Dollar CAD is up 44 with dollar franc up 83. Euro yen is up $1.26 with pound yen up $1.84, and US yen up $1.28. Gold's currently down 13 points. That's down 1% on the day. Silver is flat on the day, and copper is up 0.3% on the day right now. So now that we got our current market wrap caught up, let's go ahead and check out our market news on the day. And we talked about some of these trades yesterday. Let's look at them and see what kind of opportunities presented themselves so you can learn from that and use that going forward as I lay out the trading plans for the week on the news trades. And so let's see here, what do we got that we can take advantage of? Let me pull this chart over here onto the screen for you, and we'll look at it and see what happened, and we'll also see what's coming up. So we had, let's see, pound dollar had announcements come out last night. We had the UK CPI, and, not just a massive move overall, but let's see here. Let's put a couple things on here. And like I said, we'll look at each piece of this trade and how to, learn from it, use it, and how to use, this on future trades. Okay, so again, we had the UK CPI. The number that was expected to come in was 2.8, and on that we got 2.8. Okay, now the PPI came in a little worse than expected. The RPI came in at expectations. The core CPI, which is a minor impact report, came in a little worse than expectations. HPI came in a little bit worse. PPI came in, I guess you could say a little bit worse, not much worse than expectations. So really, the only things that were really off were the things that were minor impact. The thing that mattered was the CPI. And we're looking for, when we're doing news trades, we're looking for fundamental shock. Okay, again, we're looking for fundamental shock. And if we don't get it, we're looking to get out as quickly as possible at break even. So we literally set our orders to break even to exit the trades. And so obviously we did not get it today. We were looking for a solid 30 to 50 pip move, and easy, like right off basically no matter what the announcement was, especially if it was off. And then pound dollar had an average move of 50 pips with or 72 pips, breaking 50 pips 76% of the time. Well, this time looks like it was not one of those times, so let's look at that and see and put all those pieces together. So again, right here, the announcement came out, and we got to move to a low right there of 35 pips, and we got to move to a high, and this is something I think is really important to stress. That's why I want to go over this. To a high right there of 26 pips. Now remember, our average range, okay? Our average range is high to low, which was 60 pips. So we actually did hit the 76% of the time it has a 50 pip range, okay? And the average range is 72 pips. So we didn't quite hit the average range. We did hit the 50 pips 2 hours after the announcement, but again, that's high to low. So just knowing as soon as that announcement came out, and I mean, it came out, that's 10 minutes right there on that, just that one bar right there. You had more than enough time to realize that the announcement came in at expectations. There was going to be no fundamental shock. So immediately you should be looking to set your orders to get out at break even, either on one side of the trade or to cover both sides of the trade. So that way you can minimize, any losses on the trades. And you could have got out at close to break even, or maybe a small loss on that trade. And usually we hit them. They do really good. But you got to be ready for that exit plan, not just have the expectation that you're going to win. So you want to have that really the best traders, and it's sort of funny, have this expectation that they're going to lose. And I don't mean like, I'm down on myself, I think I'm going to lose, okay? But they have this expectation because it keeps their reality in check. They realize that every trade has a 50-50 chance. No matter what your probabilities are across the board, there's a 50-50 chance it's going to end up in one or the other bucket of that probability. Even if you have an 80% probability trade, there's a 50-50 chance this next trade is going to be in the 80% bucket or the 20% bucket. And so if you have that realistic expectation it's going to be in one or the other, then that helps you control your risk management. It also lets you not just hope that it'll eventually get there and you'll make money, but going, you know what? News came in at expectations, no fundamental shock. Goal should be to get as much of my money back as possible, not to really try to make anything on the trade. So that's how you should play that report out. And then we have the German Zoo Economic Sentiment Report. That one came out. Not a major market statistical mover. Just wanted to be aware that you're probably going to get, some volatility, maybe, 20 to 30 pips on that, and that's sort of what I was looking for. And, usually somewhat in the direction of the news there. And we got 24 pips. So pretty much right on target for the German Zoo Economic Report. And then this morning, we had the core retail sales number come on out here of the U.S. That number came in at 0.5%, and the retail sales came in at expectations. The import prices, being a medium impact, came in a little better than expectations. But basically, we had just a little bit better than expectations for retail sales, but nothing that was like, wow, this should just shock the market. So let's look at that, because the main pair I was looking at, I had a couple different ideas I talked about yesterday. One of those was euro-dollar. So let's look at euro-dollar, and let's see sort of where we were at when the report came out. So right over here, okay, and this is a stronger dollar report, right? So because the number came in better than expectations, so that means your dollar goes down, euro gets weaker, dollar gets stronger. And we can see from 8:30 to basically 10 o'clock right there, I guess we put a little bit higher because that's technically 10:10. So, but all the stats are based on 2 hours, so actually we have to go to 10:30 for the full stats. So the lowest report price we got there was 58 pips. We had an expectation within 2 hours of the average range being 62 pips, and 70% of the time it breaking 50 pips. So it definitely broke the 50 pips. It stayed pretty close within the average on the 2 hours. And if we go just within the, getting in at 8:30 for the 10 o'clock expiration, then you would have caught about 44 pips on that. Basically, you would have made a small profit. At least broke even, but probably at least a small profit on that trade. And but again, it came in at expectations. So your goal again, it was a little better. It was like 0.1, but we were going for quite a bit more than that on an expectation on a fundamental shock. I was going for either a 0.9 or a negative 0.1, and we only got 0.1. So it was just 0.5, I guess, was the actual number. So we got 0.1 higher than the expectation. So I didn't expect just a mass. I'm surprised, honestly, we got that big of a move. But anyway, so that when that came out, you're sort of going for break even again, because the number really didn't have any kind of fundamental shock value. You definitely would have got break even or small profit on that trade just by looking at, did it shock the market? Because that's where the big move's going to come from. Let's see here. We got tonight. What do we got? We have the Aussie dollar wage price index coming out, so that ought to add a little volatility to the Aussie. And that volatility can last all the way the next day. Aussie's really interesting. It'll get like a pop, and then it'll chill out, and then it'll just sort of trend a lot of times for right into the next day before you really see the big impact of the move. But anyways, you're a nighttime trader. There's a 20 to 40 pip move at 9:30 tonight you should be looking for. And let's set up tomorrow. Okay? So tomorrow, what do we have on the roster? So we talked about tonight. Also, be aware that there's we basically, and it's pretty consistent. We got the weekly weather and crop bulletin coming out off the USDA's website. That'll come in right at 4 o'clock this evening, this afternoon. And then, but let's go ahead and scroll over to tomorrow. The pound dollar has their MPC meeting minutes. So they're Fed meeting minutes off their last interest rate votes, and you're going to get all the different details. So how many people voted for raising it, leaving it, what are the details, what was behind that, and there's a variety of trades you can do on it. And we really expect everything to come in at 009, but if not, we could get a pretty big move on it. So basically the goal here is we're going for about 70 pips, okay, on the pound dollar tonight. So you're going for a 70 pip with about a $45 risk on the trade. And that really, you could also look at pound yen potentially, but a pound dollar being the main focus. And you could use 5 o'clock, a 6 o'clock, or a 7 o'clock expiration, 7 a.m. binaries, 5, 6, or 7 spreads. I prefer the spreads because you're more likely to get out at break even on those. On the binaries, it's sort of like either you hit it or you don't. And you don't get a lot of these break even trades, which are, break even is fine. I've talked to a couple of traders like, man, I traded, and I just broke even or made a little or just lost a little, and I traded all day long. And I'm like, you have no idea. That's a good thing, okay? Any day where you can come back tomorrow is a good day. Now, a day where you make a lot of money, that's a great day. But, if the worst thing that happened was you spent hours and you might as well have been demo trading because you did really nothing but make exchanges and brokers' fees, that's okay. The goal is survival. So if you're managing your risk properly, okay, and you can come back tomorrow with basically the same account size, that's a good day in trading. And if you've been trading for a long period of time, you know what a bad day is, and a bad day is not break even. So you want to be there for those days that do just take off. And we got some awesome trades that set up today that you could have taken great advantage of. So, but it sort of amazes me. I'll hear from one trader like, man, I'm just getting torn up, and the exact same day, other traders trading the exact same instruments. I'm knocking it out of the park. And a lot of times it's people go in and they'll put too much money on one trade and they'll manage it poorly. They won't take their stops. They won't trail their stops. It's like all or nothing on the first trade. I see like so many errors just repeated one after the other after the other. And so you really want to have that good risk management in place so you can effectively trade. All right, well, real quick, let's go ahead, and that basically gets you caught up. We also have the weekly inventory report coming out on oil. But let's go over, let's check, and let's just see what might be here for us. Gold has really done quite a bit of its movement for the day already. So we're going to be real cautious on this. We sort of got it trending down. It's been trending down all day. But the closest thing we got is 1321, which is pretty close. But right now, that's the strike I'm going to be checking out here during the break. So feel free to check it out yourself. Be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so come on back here to the Diagnostics Trading Hour. So we're looking at that short gold right now. Looks like it's doing pretty good. That's the one I was checking on out as we were looking at going down on that trade there. And like I said, the 1321 was right around $30. So if I'm quoting $30, I'm always quoting in the money on premium collection. So that would always mean a sell trade. And so right now it's down. We got about 1 point, 10 ticks in our favor. The big thing on this trade, okay, the big thing, and I say this over and over and over again, I know, but is you got to be ready to get out. Okay, so if it hits 1321, you have bell. All right, we're going for $30. We lose $20, no big deal. If I get $30 on this trade, I'm going to hop out of the trade at $5. I don't need to hold the thing till expiration. So I'd be happy to be out of the thing. I'd prefer to be out of the thing because then I don't have to go into that 2-minute dark zone. Okay, and so I went in and I put my take profit order in, and then the next step I'll do is I just click right here on the amend order button. And now I have an amend order for my stop loss. And so now I could go and I could change this to like 60. Just put it above it. That'll be right about $50. So if it does get down there and it hits that, if it does do that, then I'll just hit amend order. And I'll be ready to go. So, but I got to keep my eye on that. And one of the cool things they've added in now is the underlying indicator. This is a settlement price, okay? The settlement price of gold. So being Nadex's formula where they use the last 25 trades, they subtract the 5 high, and the 5 low quotes, and they average the middle 15 quotes. And so that's the number that matters. Now, this is not the official settlement price, okay? The official settlement will be posted on their results page on their website. But this just gives you a pretty clear and clean idea, even without having charts open, sort of what that settlement's hovering at. And so it'll be pretty close to that. But the official settlement will be the one that's on the site. So that way somebody can go into their chart and looking at the 1 minute bar or 1 tick bar, and they go, well, I thought it was this. You know, it's like if you're that close, you'll find out at expiration. But this just lets you see it, and it makes it nice and easy just to pop that ticket up and see it right there. And I just use a scanner to help me find it. It makes it really easy to be able to find the trade. And let's see, what all do we have that we could also take advantage of? But it looks like that's pretty much it. We got silver's closed down for the day and wrapped on up. So I'll use this, like a little pin-up program that keeps that ticket on top, because I always want to keep it on top whenever I'm trading there. I want to be able to look at that and know where my position is so I can manage it if I need to. But I'm looking at euro dollar. I guess we'll go ahead and do a little deviation review real quick. We got the euro dollar over here, and it's sitting, came right down. I mean, perfectly. Look at this. It's perfect to 1 deviation. Bounced right up to a negative 0.7, and it's just hovering right around there right now. And we can look at gold. Gold did the same thing. I'll go ahead and pull that one up. We'll look at it. And gold went on down right to 1 deviation. And I did get another short entry on it. Looks like it would have worked out well after 11:30. But after it hit that 1 deviation and pulled back, I was like, I don't think I'm going to take any more entries. I'll just wait for the EPC trade to come up. And so I backed off and let the EPC trade do its thing. So let's see here. Looks like I got filled on that $5 take profit, so trade was profitable. And so not bad. I got sold for 29 is what I got filled at. And I was going for 30, but I'll take 29 on it. And so I made $24, 10 contracts, $240 in about 10 minutes. So not bad. Very cool way to trade. I hear people all the time. Probably one of the number one things. I don't have time to be a full-time trader. It's like, well, who wants to be a full-time trader? I mean, you can be a professional trader. You don't have to be a full-time trader. You don't have to trade for 8 hours a day. I mean, I know guys that trade for 30 minutes or an hour or 2 hours a day. And you know what they focus on? They focus on trading Nadex. Okay? So they go in and they'll do these expiration premium collection trades. They'll use the scanner I've developed to help them easily find those trades, to manage those trades. And, you know, they don't have to spend. You don't have to spend all day trying to, you know, go in and do these trades. So, anyways, hopefully that'll help you out a little bit, and you'll learn a few things as you go through. I try to do these almost every day on the show, but again, live trades, and it lets you sort of see, you know, how it works. It's not just theory, so it's actual trading. And but we're done on that one, so pretty excited there. And you know, to show you, I mean, what it does, it goes in. This is the Nadex platform, and you can see the orders right there. So, you know, sold 10. And at 29, bought 10 back at 5. The type's really small, so it's probably a little hard to see. But the order history is built right into the live platform. And you can trade live or demo, the safe way to learn, the way I recommend you learn, at the demo right there. So stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're checking out the deviation levels. Again, these are based on implied volatility. And I had a trader send me a email saying, how often should I expect it to break one deviation on high-impact news days? And my response was, the reality is it should be factored in because these are implied volatility. They're not standard deviation. They're not, traditional pivot points. They're literally based on implied volatility, the expected movement in the options market. So when there's a high-impact news day, then the deviation should be wider. So it should stay within that one deviation range. And as you can see, gold right here, just right there, right to one deviation for it stopped on the day. And we can look at a few markets. Some markets, just nothing's happening. We can go over here and, oil. It's pretty quiet. We got to move up to half a deviation. And, last night, really not much either. So, this really has been like a little over a half deviation move day for the entire day on oil. Pretty quiet. But other days we'll get a solid 1 or 2 deviations on oil. So you never sort of know what you're going to get. That's why it's good to have different plays in the playbook. And I have traders ask me, how do I know if it's going to be a volatile day or a flat day? I'm like, if you knew that, you'd be a millionaire in 5 seconds if you knew that. But what you don't know. So what you have to do is you have to have different plays, and I sort of likened it to, playing football. You're not going to go in and, do a Hail Mary pass on the 5-yard line. You're not going to kick a field goal from the 95-yard line. So you're going to have different plays for different times in the game, right? The first play of the game versus, you got 5 minutes to go, 2 minutes to go, 30 seconds to go, last play of the game, you got to make it happen, that type thing. You have, depending on how far you are, offense, defense, everything. There's a lot of things. So you want to have different plays in your playbook, not just one play. And the cool thing is you can have one way of looking at the market, but you want to have different ways to take advantage of that, such as I'll do premium collection with trends on Nadex. I'll go in and I'll do expiration premium collection. I got 5 minutes to go on the clock type thing. I'll go in and I'll do butterflies for range-bound trades. Shout out to Steven. Just got a note from him. He did a gold 1318 to 1324 binary butterfly. So props on that one. Went in and got in 25 minutes before. And basically, if we would have got out, would have looked at about, $25 risk on the trade for $25 profit, range-bound. And it was definitely within the high to low oscillation swing that gold had been doing since 11:30. So great trade right there. And that's another play in the playbook. It's a range-bound play. So there's a lot of different ways to play the markets. And, you don't want to try to master all of them at once, but you don't want to get satisfied with just one. Because the markets have basically just different, mindsets, attitudes, faces, emotions of the day, whatever. And you want to be ready for that and looking at different ways so that way you're like, oh, this is like a range bound. Okay, I'm going to go ahead and throw a butterfly on. Or this is trending right before expiration. Okay, I'm going to do a premium collection trade. Or, on down the list. Or, man, the market's just running away today. I'm going to do a trend trade. Like all the indices just taken off. And so if I go over, and I look at all the indices, right here, got them all up, and we got, Russell's up, Dow's up, S&P's up, NASDAQ is up. So right there, just flying across the board. And, one of the biggest things, I mentioned this over the Tiger Day, one of the biggest things I like to use is I'll look at the broad market index. And this is the broad market index right here. This is in Ninja Trader. You can also get this in Thinkorswim. And so right here, you can just see I put an 8-period moving average on it. I look at, 5-minute bars. And I'll just draw simple trend lines. So, go in here, and I'll connect, basically 2 high points right here. So we're going down. We got trend, trend, trend. Looking for a close above that trend. And finally, we do get a close above it. We go flat for a little while. And we start heading back up. So, I got to go in, got to add another trend line in and see, sort of what's going on. I got to put that on the other side. There we go. On the low side of the trade once we start trending. So we got an established trend at this point. Now it may decide to break down. Looks like it's starting to possibly break down now and go short on the day. But this lets me know at this point, hey, might be a good time to start tightening my stops, not taking additional shorts. This might be a time to start looking for long trades. If it does, in fact, break down and I get a couple lower highs and lower lows, that's where my shorts are going to start coming into play. So just simple things like this. This is all the shares on the New York Stock Exchange that are up minus all the ones that are down. So it's not simply the number that you're reading. There definitely is a negative slant on the day because it just dropped right out of the gate. But also it's the trend. And to show you this on Thinkorswim as well, let me pull it up on there on the Thinkorswim platform. And we'll look at it. Like I said, it's basically the same thing. And let me see here. There we go. Pull this one in, and I'll just pull this chart out of the way. And we'll just zone right in on this one. And pull up just its dollar ADVN minus dollar DECN. And so you can see sort of the same thing going on right there. And see, it's just now starting to break below. And we got to get a couple higher highs, a couple lower lows, and breaking that. So as soon as that happens there, you definitely got your confirmed trend line that you can take advantage of. So we go over here, we can grab the trend line feature. Right there. So we're just now starting to break that, which obviously is something you want to be aware of. Just like we broke it right there. Like we're just starting to break it, and it sort of went, there, and that little pop up right there at 9:45. I can go in, I can pull up, an ES chart or a Russell chart or, whatever I want to. It'll basically look the same way. But this lets me know, hey, the trend is running out of steam, at least for the moment. And, we're definitely still, short in that sense. Like we're under the, the settlement price on a couple of these. It's like one of them is still under the settlement. We'll pull those up and scroll through them here in a second. But just a really cool thing I was taught a long time ago by one of my mentors, and it's just apparently one of the most common, if not the most commonly used statistical. It's not a indicator. It's a statistical index. So that's part of my statistics part of Diagnostic Trading Hour. I'm looking at statistics, fundamentals, seasonals, technicals. And so my statistics, I'm looking at deviation levels, and I'm looking at statistical readings. So there's trend, and there's tick, and there's broad market index, and you got the NAS trend and NAS tick, and you got put call volume ratios. There's a lot of different stats you can look at. Those are a couple of the most common ones, though, that you can use. So let's go through. Let's check out the indices right now and look at them. And you can see how it was up at half a deviation, moved on down to minus 0.5. So this is something else also to be very aware of. That was a big piece where one is it hit 0.5, bounced right off of it, went straight down to negative 0.5. That is 1, okay? 0.5 plus 0.5 is 1. We moved 1 deviation on the S&P. And if I go back over and I pull up, let's see here, the broad market, we'll put that up here next to it, okay? So right over here, about 10:30 is when I'm starting to break up. Well, what happens over here? Right about 10:30. So, I don't see it as clearly, okay? I see it a lot more clearly here. I see this trend line. You can sort of draw that trend line there. You wouldn't see it till about 11:20. So I'm starting to see it earlier at 10:30. I'm getting, pretty solid confirmation at 10:50. I'm closing up right there. And then everything just takes off. But that definitely gave me my, confirmation. But the biggest thing I had, if I add that trend break to the 1 deviation move right off the negative half deviation mark, that's a wake-up call that the market's probably going to turn around on me. Now, what else do we have? Okay, well, we just broke a potential trend line again right here, okay, at 140. And then, what do we also do? We moved, how far? From negative 0.5 all the way back up to 0.5 again. We just did a 1 deviation retracement all the way back up. So we're expecting the market to pull back. That's basically 70% of the movement. There's only 30% of the days we expect it to break a 1 deviation. Not necessarily a -1 or +1, okay? -7 to plus 0.3 or, whatever. But high to low, 1 deviation, that's the number we're looking for. We just got it once. It turned around and the broad market turned around. We just got it again, and it turned around, and the broad market turned around. So right now we're looking for the market to go, south, just because it just moved up a deviation. So I'd be very, very careful on adding into long trades at this moment. Okay, and I could look at potential short trades I might have set up on charts, but I'd be very careful on long trades on the indices because of us hitting that half deviation mark, that being a full deviation move, or breaking the broad market index trend. Now, if that broad market index trend decides to pull on back up, I'm not going to avoid and not get in the trade, but I'm going to be really, really careful right now. I'm probably going to wait on a completed, up pattern there before I go in and hop back in on the trade. It's just not worth it. The risk is not worth it to me at this moment. So we can go in. Let's look at a couple of the other indices. Let's see how they line up. We'll pull up Russell right here. So over on the Russell, we got to move down. We didn't quite get the full move, but if we go high to low, we did. Okay, so let me show you this again. So let's go to settlement, and let's go to 1. So we got 1 deviation, okay? And then let's go from here, and then down to the low here. We got a 1 deviation. Remember, 0.3 to negative 0.7. So high to low, we got a deviation move. It bounced off of that. Also, of course, the same time the broad market was moving. And what did this one hit? This one hit settlement. It's right up at settlement. So even the Russell looks like it may turn over at this point, bouncing off its settlement level. Not even quite filling in the gap at the moment yet either. Okay, so now we see 2 of them bouncing off important deviation levels after moving a deviation, and with the broad market index going short. Again, if we get a confirmation of it going up, that's fine. I'm not just going to willy-nilly go short because of this. Okay, I don't try to be super counter trend. Okay, that gets a lot of traders killed. It's fun, and I will do it if I have everything lined up, but I have to follow my rules. So my system keeps me in check, and my style helps keep my system in check when I see something, that's sort of a warning flag. But right now, I'm very. My opinion would be bearish. And but I will go bullish if everything lines up to it. But right now, I'm not going to buy. That's what I'm telling you. So let's check out the Dow. The Dow. Okay, wow, we got a big move. We're bouncing right off that. This one actually had the biggest move of the day. We had 0.5 to 0.5, and then we also actually almost hit a 0.7. We moved on up. We hit that 0.5, and then actually hit the 0.7, and we're falling off that now. So far, we got 3 out of 3 indices all bouncing right off of, to the tick, off of deviation levels. Okay, and one more. Let's check out the NASDAQ. So on the NASDAQ, right here, we got to move down 0.5. We actually broke that and hit the 0.7, but we basically did a full deviation, a little more than a deviation down, and we did the exact same move back up. Okay, so right here, we're right back up to 0.5 where we were at in the overnight market right there. Let's see, what was that? 5 a.m. this morning. So all the markets are just basically like right against resistance. Okay, this is where the market failed to break highs last night. And so, therefore, will it break highs now? We're also not breaking those areas with strong volume. There's no impressive volume happening right now. There's a lot of things to say be short the market. And so, I'll look at my charts. I'll see what lines up. And if I see a good setup, like the S&P going short, that would be a short that I would actually be favorable to. If I had a long on another indice, that'd be one that I'd be probably avoiding at the moment. So, hope that makes sense. But it's the style part of trading where you go, is there something that says, something that's very objective, not my gut feeling, not CNBC, but is there something, do I see several things, not just one thing, but several things that add up? Well, I see all 4 indices hitting a deviation level. They've all moved to deviation. We got the broad market index is breaking its trend line right now. Those are a lot of good reasons to be short. So if I have another long signal right now, I'm probably not going to take it. If I have a short signal, I'm going to have a little more confidence in it. At this point, it would be worth it to me to take the short trade. So I'm just trying to walk through a few examples for you. Hopefully that helps some. Let's see here. What else do we got over there? Right on this, we'll go into, check out our soybean market. Right here, we got to update those. Another new deviations. They just rolled into the new contracts over on Nadex. I was pretty impressed they got that new change made. So we'll have that up on there by the end of the day tomorrow. Let's see. What else do we got that we can check out? We'll go ahead and look at silver. So over here on silver, we got a perfect move down to 0.5, and then it moved up a perfect 1 deviation to the tick before falling on back. So major resistance levels, as you can see, it'll go right up to a level. There's a price alert. Move that out of the way. They'll go right up to a level, pause, hesitate, hit it, pause, hesitate, then fall back, and then literally just does a swing trade most of the morning, right here between half deviation and settlement. We can also check out copper. So right over here on copper, we got to move, let's see, looks like about a 1 deviation from high to low. Just don't forget to measure that high to low. For your 1 deviation move when you're looking for a deviation. Don't just look at the deviation lines. Look at the high to low. Look at the range. Okay? All right. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So let's go ahead. We'll check out what other news we got coming up this week. I got all the stuff updated for the week, so I just want to see anything else you can be aware of that you want to be focusing on. Again, a reminder, we got the Aussie Dollar Wage Price Index. Small movement tonight on that. We have the UK MPC meeting minutes coming out tonight. Ought to get a pretty good move off of that. Weekly oil inventories coming out tomorrow, along with the Aussie dollar inflation expectations coming out tomorrow night. Should get a solid 20 to 40 pip moves on that. And then going over here, and let's see here, on the 15th, let's see what do we got. On Thursday, we got France and Italy's banks are going to be closed. We're also going to have a nice pound retail sales. Straddle strangle that we can do, and then we'll also the U.S. core CPI at 8:30. Straddle strangle we can do as well on Thursday. The Philly Fed Manufacturing Index, that one's going to come on in right there as well on Thursday at 10 o'clock. So just be aware of that. It usually is not a big market mover, but the market can change course if it is drastically different than expectations. Then natural gas inventories will come out at 10:30 on Thursday, followed by Australia's RBA governor speaking. That can be a 20 to 40 pip, or it can be a 150 pip move. You never know what is going to come out right now, especially with all the changes in the Aussie dollar interest rate lately. So that could be a more volatile move than the average 20 to 40 pip move when he does speak. So just be aware of that one. That's Thursday night at 9:30. And then, let's see, Friday morning, we're going to have building permits and housing starts come on out. So go ahead and check a potential copper strangle, or you could even go directional on the trade afterwards, because think about it, building permits, housing starts affect copper. So you can play copper on the Nadex exchange. I usually don't trade the spreads. I don't like the way that they tick, but I do like the binaries. The only spreads I don't trade on Nadex, silver, copper, and NASDAQ. All the other ones are fine. But those I do not prefer. But I will trade the binaries on those three markets. So you can check out copper on that. Then we're going to have manufacturing sales come out on the Canadian dollar there. And at 8:30, and then we'll go into this sort of an interesting one I'm looking at. The University of Michigan Consumer Sentiment Report is coming out at 9:55. Well, we have 10 a.m. expirations. So one of my thoughts is to potentially go in and potentially do either a really cheap straddle or, maybe a binary butterfly, but probably a really cheap straddle like 5 minutes before that announcement gets released. So like 10 minutes until expiration, or even a strangle, if you can get like just right above and below. And then let's see, over here we can go into consumer sentiment. We're going to have that one in. See, and then we'll have the crop progress reports and the weekly weather crop bulletins, but those will be after the market closes. But they will roll into and affect corn and soybeans on the market open on Sunday there. So that gives you your weekly news wrap on everything for this coming week. So you ought to have a good little plan. We'll go into the details as the markets come up. Let's do a quick wrap on where the markets are right now. We got the S&P is up 5 1/4. We got the Russell down 1.4. NASDAQ is up 11.5. Dow is up 62 with oil up 63 cents now with a nice run right there at the end. It was flat. We got natural gas currently down a little over 0.5%. We got corn up nearly 3% on the day. Soybeans up 4.5 points. And let's see, we got euro dollar down 42, Aussie dollar down 52, pound dollar down 14, and dollar CAD up 43. All right, well, have a great day. I will see you tomorrow right here on the Diagnostic Trading Hour, and stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.